It is official, Ether ETFs have been approved, and this can be a very big wave in the whole entire crypto and stock and investment community. Hey Tribe, welcome to the channel. Today we are diving into the world of Ether ETFs, a very hot topic that's buzzing in the investment community. So in this video, I'll be talking about what Ether ETFs really are, how they compare to Bitcoin ETFs, whether the market sentiment right now is bullish or bearish. Plus, I'll be sharing 3 possible strategies we can use to leverage on this Ether ETF that we usually couldn't if we are just buying the Ether itself. If you love videos like this, please help me smash the like button and also comment on what other topics you want me to touch on. Now first, let's break down what an Ether ETF is. An ETF, or exchange traded fund, is a type of investment fund that's traded on a stock exchange. Much like stocks, we can buy and sell, but this kind of stock, it doesn't provide products or services, it holds assets, such as stocks, commodities, or bonds. And in the case of an Ether ETF, the fund's value and what they do is to buy Ether, the native cryptocurrency of the Ethereum blockchain. Now, I want to share with you that there are 2 types of Ether ETFs. The first one is spot ETFs, and the second one, future ETFs. Spot ETFs actually buy Ether in the custody, providing direct exposure to the currency. What it simply means is, these ETF collect money from the investors, they take the money and they buy Ether. Now, future ETFs, on the other hand, they invest into the future contracts based on the price of the Ether and not the asset itself. It is like purchasing an option, but in the Ether world, the commodity world, it's called futures. So which is better? Let's look at Bitcoin ETFs for some context. Spot ETFs are generally more straightforward, as they just purchase the particular asset and they track the actual price of the asset, like Ether or Bitcoin. They perform well in stable or bullish market since they directly reflect the Ether's price or the Bitcoin price movement. However, one key concern that people may have is the risk of holding the actual asset, because there has been cases where there has been hacking, so there's concerns over security and storage. Futures ETF, on the other hand, can perform better in volatile or even bearish market. They allow for speculation of the future price of the Ether or the Bitcoin without actually holding it. This can be advantageous in managing risk and capitalizing on price movement through leverage. That's the keyword, leverage. However, futures ETF, they can suffer from this thing called contango, where future prices are higher than spot prices, leading to potential underperformance. Now, this is slightly advanced, but futures ETF, they purchase a particular future contract and they have to keep rolling, and this incur the cost as well. So Bitcoin ETFs have shown these dynamics. For example, Bitcoin ETF like Grayscale Bitcoin Trust, they tend to perform well during sustained bull markets, closely tracking Bitcoin's price. When Bitcoin price went up, this particular ETF performed very well. Meanwhile, Bitcoin futures ETF, such as ProShares Bitcoin ETF, BITO, can offer better performance during periods of high volatility due to their ability to leverage future contracts. However, they might also experience higher tracking error and cost due to the complexity of rolling over future contracts. Now let's look at some history and approval process of Ether ETFs and why this is such a big news. Following the success of Bitcoin ETFs, several financial institutions began pushing for Ether ETFs. In early 2024, the SEC approved multiple Bitcoin spot ETFs, paving the way for Ethereum. The anticipation for Ether ETF approval gained momentum when major firms like Franklin Templeton and Vanguard submitted their application. The approval of these ETFs is expected to enhance liquidity and drive institutional adoption, similar to what we saw with Bitcoin ETFs. So what does that mean? This means that the market sentiment for Ether ETF is largely bullish. And the reason is this: analysts predicted that with the approval of spot Ether ETF, this will drive significant institution adoption and also liquidity. And the technical indicators right now also suggest that Ether price could reach a new heights, potentially surpassing $5,400. Well, see, once the Ether ETF has been approved, institutions launching this ETF will need to buy significant amount of Ether. For example, when Bitcoin ETFs were approved, companies like Grayscale and ProShares had to purchase large quantity of Bitcoins. Grayscale's Bitcoin Trust bought approximately 650,000 Bitcoin by the end of 2020, and ProShares had to buy significant Bitcoin futures contract. This influx of institutional money buying contributed to the Bitcoin's price surge, with Bitcoin reaching an all-time high recently before it dropped. So we can almost expect the same movement in Ether, reason being when institutions start to form their ETF, assuming they have AUM of 100 million, they have to take the money to purchase either Ether or Ether futures. Finally, let's talk about some strategies as a stock options investor, how we can leverage on Ether ETF. Now, number one is just buy the ETF and hold long term. Because if we believe in the potential of Ethereum, we can consider buying and holding the ETFs. This strategy allows us to benefit from the price appreciation upwards. One more thing about Ethereum is that their technology is growing and there's a lot of use cases. Unlike Bitcoin, there's just like a gold holding on to the commodity and hoping that the value of gold increases. Bitcoin, that's what we are looking at. Hoping that storing Bitcoin, we will benefit because the value increase. Now, where else Ether has an actual use case? We can use Ether for transaction on Ethereum, which is a platform that allows people to develop things on that particular platform. It's just like purchasing prepaid credits to buy things on the internet. Now, the second strategy as options investor, we can use covered calls. A lot of the Bitcoin ETFs start to have options where we can buy and sell options. So covered call is for us to generate income. Selling covered calls on our Ether ETFs, once they have been approved, it's almost like staking, but it's slightly different. This involves selling call options while holding onto the underlying ETF, earning premiums from the options that we sell. This strategy, based on the volatility of cryptocurrency, can make you potentially maybe even 2, 3 or even 5% every single month. So a lot higher than just staking the cryptocurrency. Now, another beautiful thing about a cryptocurrency now being an ETF is we can buy protective puts. This is to mitigate the downside. And when you consider buying protected puts, it's like buying an insurance on the asset. This hedges against potential price drop, offering us a safety net for the investment. So personally, I'm excited that cryptocurrency is now being traded in the stock exchange per se. And while I have a crypto wallet, I don't really trade Bitcoins or Ether that much. However, now that they are in the stock exchange with options, I can actually look for arbitrage opportunity. Now, what do I mean by that? Now, do you remember when we talk about futures ETF? The ETF don't really purchase the asset, but they purchase the futures contract, locking in a certain price. Because of that, there's this thing called tracking error. These future ETF, because they are supposed to track the price of the asset, sometimes due to tracking error, they can be overvalued or undervalued. This gives us an opportunity for arbitrage. So here comes a potential strategy. Whenever the futures ETF underperform based on the underlying asset, for example, when Ether goes up by 10%, but futures ETF only goes up by 8%, there's a 2% arbitrage opportunity. In this case, we can purchase the futures ETF and short the Ether ETF until the price converges and loses the arbitrage opportunity, making us that 2% differences. This is a slightly advanced strategy, but let me know in the comments below if you'd like me to expand on these strategies so that as a tribe, we can look for investment opportunities with much lesser risk. I do hope you enjoyed this video. Comment below, let me know, give me a like button, and remember to subscribe, and I'll see you in the next video.